Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, September 17th, 2019. Before we get into the charts, just another reminder that tomorrow is the FOMC announcement at 2 p.m. Eastern Time. Not all the Fed meetings are potential market movers. This one is, as have recent ones been. Market's going to hang on every word, what they, whether they cut, how much they cut, and then more importantly, what do they come out and say afterwards. So let me say this. What happens usually, and it's already happened here, the market tends to go into a holding pattern leading up to an FOMC decision like this, and that's what we're doing. Another down day. There was a lift towards the close, technically induced. I'll cover that in the charts in a second. We kind of cleared out above some the recent trading range here. Other than that, the Qs were mostly flat, or flat most of the day, pretty much flat. SPY was marginally up a quarter point, and again, most of that, most of those gains came at the end of the day. We ticked up and took out those the short-term resistance level. So that's all you're going to have before the Fed meeting. Short-term tactical trades, day trades, things like that. That's about it. And then after the meeting, and this is very important, you're going to see at 2 o'clock immediately the market's going to rip up or down. If you're watching the streaming 1-minute charts, this is almost guaranteed. You see a sharp move up, sharp move down, just quick trading. That's the algos, the high frequency trading programs firing off trades in milliseconds. Traders trying to, and the computers more importantly, trying to parse a lot faster than humans can what the Fed has said, especially when the Fed statement comes out. So what I try to do is take a step back. I call that post-FOMC noise. The initial reaction, whether it's a sharp move up or down, is quite often not the lasting reaction. You tend to get a sharp move up, another move down. For example, here was the last Fed day right here, and you can see what I'm talking about. So, it doesn't mean the initial move can't be the one that sticks. In that case, it actually was. There's a sharp move down followed by an even sharper move up. So if you shorted that, you had all your stops blown out. And then if you thought, oh, we're going up, you go long, then you had your stops blown out again. So that's just the norm. And sometimes it's not just a 1-2, punch. It's a 1-2-3 back forth. And I call it again noise. It's let the market figure out which way it wants to go afterwards. Now, most important thing I can do is give you key levels. And remember, that day we came in, it's not shown here on the 60-minute chart, but we had a beautiful back test right there. We had that uptrend line. I did point it out. It was on the daily chart. Breakdown, back test, and that was and proved to be the last objective shorting out before that big drop, second biggest drop of the year. So I can't get posts and charts out quick enough, and that's why I do these videos. You can replicate trend lines, look at levels to watch, and then maybe if you see an opportunity, jump on it. All right, so let's just zoom back today. All right, so bigger picture, here's that. I know this chart's getting a little busy here, but you still have that big August trading range back here. QQQ, more so than SPY, made a series of higher highs. You also had a triangle pattern we broke above. But the lines I'm focused on right now or the trend line I've been showing recently on QQQ. This uptrend line right here, I had to exclude a little cluster of candles on that one. So what I've done today is I've added what I call a BOD, or benefit of the doubt trend line. In other words, you want to play it safe. You wait till the last of the two to break. So this way you have 1, 2, 3, and now cluster reactions here. And again, whipsaw signals, meaning false breakdowns that snap back above support or resistance levels, are the odds of those are increased in the days leading up to and immediately after an FOMC announcement. So it's just part of the game. How do you trade? Well, you either do one of two things. If you're not sure what to do, stand aside, let the dust settle, let this market pick a direction, and that could take a day or two, maybe even or into early next week after the FOMC meeting. If you're an active trader, keep your positions light. Don't go full all in on some breakdown or breakout above the new highs that could be reversed shortly afterwards. But those are levels to watch. And here's the micro levels today. I should here, I'll pull this trend line down a little bit. I'll just do this. We had a trend line right here. This was the top of the recent trading range. You can see here, that's 2 days of trading right here, tight compression in this range here. So that's what I'm talking about. Today we broke out. You can see very well defined at the top, and so that was the lift in the last 10, 15 minutes into the close today. You'll see it better on the 1-minute charts. And so again, it doesn't really mean much technically. It's just near-term stuff. If you're a day trader, you know, could have caught that. And we made a perfect backfill. This is, I believe, yeah, that should be yesterday's close right there, the bottom of that candle, the body. And that's all we did, is we just entered the gap and then backfilled it right there. That's all that was. These two lines here. This was your gap, and this was simply a gap backfill. So like I said, the technicals work. If you know, if you have the time and, you know, inclination, you can day trade these markets. And the way you day trade, you know, to make a quarter point on SPY or a quarter point, that rally was about a little better than a quarter point from when it broke out on QQQ. Day trading is, like I said, with that oil trade today, you just leverage up because you don't have any overnight risk. So you set your stops appropriate. It's like swing trading in fast forward, and also you're going for much smaller percentage targets, so therefore you use a much larger position size, and you can do so because you don't have overnight risk. You're not going to have your position gap against you, you know, at 2:30 in the afternoon. It can move sharp if some news breaks, but that's where a stop placed in advance can bail you out in case Trump fires off some tweet in the wrong direction and the markets suddenly move down, but they're not going to gap down, not during the day. So there's SPY, same thing. That's the body right there, the fat part at the bottom of that red candle. That's yesterday's close, a perfect. This is what I'm talking about. This is the machines trading, you know, I don't even have the line right there. Let me zero it in there, right at the bottom of the body, and a perfect backfill there. And you can see where we broke out of that line. Should be right about there. That's pretty much the top of that recent trading range. Boom, broke out and backfilled it. So just short-term technical stuff. Now, where do we go tomorrow? And after that, what do you want to watch for? Well, we had, remember, this uptrend line here. We had this trend line on SPY. I'm going to get to the futures in a second. So an upside pop, which, you know, coin toss odds to me, whether we pop up or down tomorrow after or even before the FOMC announcement. But I can tell you this, that would be an objective short on the back test of the trend line. You might want to wait to see some type of reversal candles because, you know, back testing, you can keep going there. Any new high, let me zoom back out here, in SPY and QQQ, as I've been saying for a while, will simply be, at this point, if it happens soon, as in tomorrow, will be marginal new highs and divergent highs, I should say. More accurately, any marginal new high will be a divergent high. That's the way I meant to say that. And why? Because there it is. We would extend, let's say we come in here, back test up here, pop the new highs. Everybody says, yeah, another breakout. You know, we failed that one the other day, but another breakout there. And you can see here the indicators are lagging. So you're still going to have the negative divergence should we pop to new highs soon, as in this week. Excuse me there. All right, let's see. Next one up. Well, we'll go back to QQQ, and I'll show you the same thing there. QQQ, 60-minute. There it is. We extend these divergence lines. Should we pop up tomorrow and either match the previous highs, or let's just focus on this previous high, it will still be a divergent high like this. You can extend that and see the same thing here. Pop up. Keep these divergence as long as we remain below those previous highs, ideally below this one here, but this is the peak high right here on the indicators, and so there's your divergence line forming right there. So that's what it would look like, something like this, and a marginal new high. And again, your sell signal will come if SPY and QQQ make impulsive breakdowns below those levels, and at that point you have a pretty good resistance, or I'm sorry, support here about 191.18. Okay, on to the futures. So let's take a look at NQ. Here's that same uptrend line that comes off the lows back here, mid to late August. I think it's about August 23rd or so. There's your uptrend line. There's the breakdown back test. Nice and clean when you look at it on the futures. You have more reactions, and you can also see some notes that I put here. So there's that breakout today in NQ right there, the recent trading range, and again popped up, and we're a little between these two levels here. But what I wanted to show you here, again, more importantly, is here's a potential. Again, it's only a potential a head and shoulders topping pattern. So as you can see, I have a couple things labeled here. I have LS, meaning left shoulder, head, and then right shoulder. DH just means we had a divergent high. So there's two things in play here. We have the wedge right there, and here, which already broke down, like I just showed you, breakdown, back test so far. And then we have this potential head and shoulders topping pattern forming. You can do a Google search if you're not familiar with what those are. They'll talk about it. You have a couple components. You have a neckline, and then a left shoulder forms. You have something that takes the shape of a head, and now a right shoulder. So that right shoulder certainly has room to come up a little more and back test the trend line. In fact, it would almost be technically perfect if it did. The symmetry. What you don't have to have perfect symmetry, but the more symmetrical these patterns are, the better. What I mean by that, it means, you know, you have a head here in the middle, and so how far the left shoulder rises to the right shoulder. So the symmetry here, this would be, you have head and shoulders patterns can have flat necklines or upward or downward sloping. Since this one's upward sloping, the symmetry there would be, if you put a parallel line to the neckline, that would give you the perfect symmetry. So something to watch for. Again, I say potential because we don't have the right shoulder formed. One of the criteria, and I think a lot of traders overlook this, these are some of the more popular patterns. I think they're overused because they're so easy to recognize, but you want to confirm it with the volume. And so what you want to look for here is, let me throw up the volume bars. One of the criterias, or at least the volume criteria, on a head and shoulders is you want to see increased volume off the right shoulder, off the head once you top, and that move down, the impulsive move down that puts in the head. Then you want to see the same thing here. So that's what you'd be looking for, an impulsive move down after we reverse on increased volume, and that would help firm it. Now this throws it a little bit. You might want to use QQQ because these are the NQ December futures. Remember I mentioned they just rolled. The futures this week have rolled from the Septembers to the Decembers on the NQ, so you don't have a lot of trading. Back here, everyone was trading the, most people were trading the September contracts. And here's ES, similar story. You know, obviously the NQ and ES are usually going to have pretty similar charts, because they do have a lot of the same components, especially the top components in there. So there's your wedge pattern, there's your breakdown, and then you also have right here a little bit steeper on the on the neckline. If I want to look at the head and shoulder stopping pattern, I'm more focused on NQ, but I do keep an eye on both of these. So that would be your left shoulder, of course. There's your head, and so far not a lot of lift on the right shoulder, but maybe if you get a pop up tomorrow, before or after, probably after the Fed, and then watch for a breakdown there. And again, I still favor, whether we make that marginal new high or not, I still favor a back test of the trend line right here. I'm sorry, back test of the trend line, a back test of the August trading range right there. And again, that's a minimum target. And if we do that, then, you know, I would expect a reaction there. I'd expect the buyers to step in, so you might have a, you know, tactical trade where you can reverse, unless things get really ugly. And that's again the nature of you gotta be adaptive. If you know, I'll most likely, if that does happen, if we have a swift move down there, I'll probably reverse my active trading account, and with a stop somewhat below. But if you just slice on through like it's not even there, that's going to be pretty telling. Not just an initial quick pop and then a recovery. I'm talking a move down, and that would most likely, as I said before, if we enter this channel or trading range with conviction, we're probably going to bust on down through the downside of it, and that's where things get ugly fast. So a lot of work to be done before then. Again, but you know, to try to quantify it, I think the upside's minimal, couple percentage points to the high top at best. So I'm comfortable, you know, still holding swing shorts. And as I told you guys lately, I've been back hedging, been kind of on and off actively trading the metals. You know, I was going to do an all-inclusive video right now for subscribers. Skip the public update. I'll stop here because this is general market analysis. I'll get this out to the YouTube channel and on the site, rightsidethechart.com, as public content. And then I will follow up with an update on the other things that we've been trading. Like we had that nice day trade op today on the front page on crude oil, pull back to support, got a quick 2.25% on that. The metals are setting up, as I put out some charts today, and then a lot of the ag commodities I'm watching too. We're seeing some movement there, some interesting developments. So let me get this video out to you guys, and I will either do a second follow-up video or I'll get those charts out to you in screenshots either later today or tomorrow morning. Most of those I already give you the patterns on gold, silver, whatever, crude oil. Those charts have been out today on the site, rightsideofthechart.com, for members who want to check those out. And I'll try to do a follow-up for the ag commodities. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.